Hey guys, welcome back to the channel. Welcome back to Phantom Strategies. So I just wanted to have this quick video update regarding this news that's coming out that Goldman Sachs, which is one of the biggest financial firm in the world, actually, they just bought one of their startup that they purchased recently have acquired Poloniex exchange, which is a cryptocurrency exchange. A lot of you might have an account on it as well. This is a major news. So Goldman Sachs is known. They are one of the very prestige financial firm, very good reputation in financial industry, very strong reputation in banking industry, and buying something into cryptocurrency and buying an exchange, which is like, I think it's really major. And I have said this before that, genie is out of the bottle. Whether you like it or not, the cryptocurrency, Bitcoin, the genie is out of the bottle, and this thing is here to stay. All right. So yes, you might have a short-term, up and down roller coaster effects, which is very natural, which is very part of the market. But in long run, I still think I'm very positive on cryptocurrency, and these things are just proving more and more points. Recently, Bank of America, they said that cryptocurrency is potential risk for them in in one of the articles to their shareholders, which tells you that first all these bankers, all these big institutional firms, they were just laughing at it, like Jamie Dimon calling Bitcoin like a fraud. They were just in denial, basically, because when people don't understand something that is new, that is a new technology, which is going to change the way how we have been doing business for centuries, thousands and thousands of years, and that's going to change that. So people obviously will be a little bit reluctant to have that change. These people have millions, not billions of dollars, have sitting in in their assets. They might have apartments, luxury apartments, like land, mansions, and they have acquired this wealth obviously over the years, and all of a sudden there is a huge wave of this online money, this digital money, which is coming in, and people get scared. It's a natural thing. It's like, is my dollar value that I have worked so hard for, is it not going to appreciate anymore? Is it not going to is it becoming irrelevant? Do I need to buy into this cryptocurrency revolution? So there are a lot of questions that people tend to ask, and especially when the big banks like Goldman Sachs. Goldman Sachs is a very reputed bank. If you I'm sure there are a lot of professional young professionals who are into cryptocurrency and who are watching and following this channel, and you can comment on it below. It's one of the very reputed firm, and so for them to have a approval stamp, or for them to buy an exchange through a startup that they're backing, but still, which is a very strong statement. So whether you like it, whether you deny it, whether you think this is a bubble, whatever you want to call it, this thing is here to stay. All right. So what do you is the real question is how you're going to make money off this. All right. The real question is how you are going to get into the, you don't want to be one of those guys who are buying it all the way on the top. You obviously, that's why you want to make sure that odds are in our favor when we're making those trades. Okay. So if you go to this article, I'll post this article in this link below, but like, if you go to this article, you can read all about it. This is all positive thing, you know. This is what I was keep on saying, that even on the weekend when I was keep on saying, and this really, you know, I've been keep on calling this thing because like I really, when I strongly believe in something, I have I mean I try to back it up with my own analysis. But like, you know, when the news event comes out and like, you know, confirm those kind of belief, then you really, you know, you really feel like, yes, okay, we are on the right track. This thing is not just a boom and bust town. This thing is here to stay. All right. You know, it's like recently, you know, the big cryptocurrency acquisition could create a Wall Street Drive financial joint. So I mean, yeah, this is like, if there's another article that you can read about this. So there are a lot of investors who are coming in, and there are a lot of investors who are still sitting on the, you know, sideline. They are just on sideline waiting. Some of them, a lot of them, not some of them, a lot of them cannot even create the account right now, or if they have created the account, they cannot link their account to their bank or to the credit card because of, you know, so much backlog that have created into these exchanges like Coinbase and Binance and you know, Bitfinex, and there are so many. So I mean, there is more wave of people who will come into this. Okay, that's for sure. There like, you will see more and more people come in where the crypto shark swims. So like Binance, Upbit, Kraken in US, Bittrex, Coinbase, Gemini. So you know, it gives you like, I will post this article as well. So like, you know, overall what I'm just trying to tell you is like, you know, the genie is out of the bottle. Like, you know, when these big boys come into the market, they're not coming into the market for short term. Obviously they have done their analysis, they have done their risk management. These guys are not coming in with you know, blindfolded. They're coming in with plan. They have a structure. They have a team who is already, you know, done their analysis on it. So they're not just, hey, Bitcoin just going up 10,000, let's go buy an exchange. No, it doesn't work like that. There's a lot of like, you know, background planning goes in that people don't hear about it. I've been part of this firm, so I know exactly. I have been part of this team. I have been part of a startup, so I know exactly what goes behind the closed door. And I mean, there is a lot of smart people who are in there and who are making this plan. So it's not like, you know, someone threw an idea and like, you know, and everybody's like, yeah, that sounds great, let's do it. No, it doesn't work like that. You need to create that case for it. You need to create that, you know, kind of like, you know, you have to sell it. You have to make sure that it makes sense. And these guys are in to make money. They are not doing it for the charity. All right, so they are doing it to make money. All right, so so you know, when they're coming in, so you know that this thing is not just boom and bust. So this thing is here to stay. And I just want to quickly give you this recap on this article that I saw. And also there is also another article on CoinDesk. Goldman Sachs latest bank to label crypto as a business risk after Bank of America. So Bank of America already did that, and now the Goldman Sachs is also coming out, because these guys last year they were calling this thing as a, oh, this is a bubble, this is just a, like, you know, big what do you call it, just like, you know, it's just like a scam. Like Jamie Dimon from JP Morgan, he was in the media, he got bashed a lot, and he still doesn't, I mean, because they don't believe in it, because they never grew up in this kind of era. These guys are in their 50s, 60s, and it's hard to understand the technology behind it. It's hard to understand because they grew up in a different era. So you have to really think from that mindset. Like, you know, Warren Buffett, who is always like, a lot of you guys have probably heard that name. He's a all time, one of the greatest investor, but he doesn't understand the cryptocurrency. He doesn't understand the blockchain. He doesn't understand Bitcoin. So I mean, that's why he doesn't want to invest in it, which is a very fair thing. A guy who has billions and billions of dollars, why would he invest in something that he doesn't understand? But if Warren Buffett was like 20 something right now and he is just getting into the market, I bet you he would have been investing in cryptocurrency, because his risk tolerance would have been much higher in his 20s compared to his 60s and 70s, right? Because as you grow older, your risk tolerance goes down. When you're in your 20s, you take higher risk because you have lower liabilities. You don't have any family to support. You don't have any kid to support. You probably don't have house that you have to pay mortgage on. So, but as you grow older, your liabilities goes up. You have more responsibilities. So you go toward more safer investments. You go into more blue chip stocks. Cryptocurrency might be a very small percentage of your portfolio if you still believe in the technology, but as you grow older, people who already have made monies in their 20s, 30s, 40s and 50s, they won't go with 50% of their investment into cryptocurrency, because they already made their money. They already made their money in stock market. They already probably made their money in real estate. They already made their money somewhere else. So why would they risk something which is just in their infant stage, and then get into this kind of things? So so just because they are not getting into it doesn't mean it's wrong. Or this market is corrupt, or this market is, it doesn't have any future. It just doesn't fit. It's not a right strategy for their investment. If you are in your 20s, 30s, 40s, this might be a perfect strategy for you, because you're still growing. You still have X amount of risk that you can take, and you know that you can recover if that things doesn't work out for you. But it's hard for the people who are in their 50s, 60s, 70s to take 50% of their investment and put it into cryptocurrency. So I can totally understand that. Charlie Munger, which is one of the partner, Warren Buffett's partner, he said it a couple of times that he missed out on Google when Google came out. He missed out on a lot of this, the tech company that came out, and they never invested into those companies. And he said there will be plenty of things, there are plenty of investments that he will miss out on. But that doesn't mean that he has anything that comes out that he has to invest in. All right, so he just have to invest in few things, but the right things. And that's how he said if we can latch on to few things and good things, they will make money on it. So that really goes back to the point where you don't have to invest in every single coin that comes out into the market. You don't have to invest in every single ICO. You don't have to invest in 10, 20 different altcoins. That's why you need to consolidate those things. Make sure you are focusing on few things, and focusing you're managing them properly. It will be much better. So it will be you'll be much happier investor. When everything is going up, it doesn't really when everything is rosy, everything is green, you don't realize this kind of things. You don't question this kind of things. If you have 20 altcoins sitting in your portfolio in 2017, you wouldn't have questioned this thing, because everything in 2017 went up in straight line. It went up. Doesn't matter if the most garbage thing that you can imagine went up. And that 2017 was a different animal. So now you have 2018, so you have to really adapt to that 2018. So you want to make sure you learn this thing sooner rather than later, because if it's too late, then you will blow up your portfolio, and you will be one of those stories that, hey, there was a time that I made 200,000 in cryptocurrency, but I should have sold it, but now I'm back to that 10,000 that I invested, blah blah blah. Or even worse, you blow that 10,000 out too. So learn from these things. It's here to help you, and so main thing is, overall, just to recap, when this guys, when the bigger firms like this comes into the cryptocurrency market, it's a positive news for the overall market, because this really puts a lot of faith to people who are sitting on the sideline. They will read this news and they'll be like, oh wow, this is great. Goldman Sachs coming into cryptocurrency as an exchange, they want to get into the exchange business. So that really puts their stamp of approval to a lot of investors who are sitting on the sideline, who are just watching the market from the sideline. And trust me, there are plenty of them right now. So this is good. And the second thing that I want to do, I quickly recap, is you don't have to invest in every single thing. All right, you don't have to invest in 20, 10, even 10 is a lot to manage. All right, 10 cryptocurrency, they're very speculative. Altcoins, even 10 is very hard to manage. So please make sure that you're not stretched out too thin and you cannot manage those things. Otherwise, it's just the same thing as going to Vegas, and you're just you're just testing your luck and see how long your luck will last. All right. So that's the thing. You wanna make sure that you are investing as a professional, not as an amateur. That's the ultimate goal. All right. So that's all. I will do another altcoin review later today, and let me know what do you think about this news. If you heard anything, if you have any other news that you want to share, I would love to hear from the viewers as well. All right, talk to you soon. Bye.